Hey everyone, this is Midnight Brands coming for our second recording actually of our inaugural video here. Going to walk through and do and focus on prep for Tuesday, September 6th, since Monday will be a U.S. trading holiday. And so we'll just kind of walk through that and try to explain a little bit about what we're looking for, kind of why we tried to do some of the royal flush zones and whatnot here. So um, hopefully we'll reduce some of the. We don't have the same problem we had before, where the audio is just a little bit too loud. Um, Kind of nice having it kind of there in the background, but it was a little bit too loud last time. So we're gonna try this again. You got to forgive me. I apologize again. First work in technology is kind of day job stuff, but streaming things are kind of new, and so this will be a little bit interesting to see how it all plays out. Okay, so with that, we will come out of here. We're going to start towards the top of our list, and actually, I'll pull back up that Twitter window here real quick. If you haven't seen, we've started posting a little while back and trying to highlight what we have termed as royal flush zones. And right now we're saving off and sharing kind of what are the key levels that are of interest. And the whole point of that was, I mean, there are thousands and thousands of ticker symbols out there. And if we can help reduce to find what are the right areas that, we should focus on, then that should have some benefit. You don't have to pay attention to all 1,000 tickers or go scanning all the time. Let the algorithms come try to help you, and then you can distill that list further down to which are the ones that make the most sense to you. Which are the ones that play or come into your playbook? Um, because a lot of times, you can definitely have false positives in just about anything you build out, automated or manual. Right? You think about it, you can have something you think just looks beautiful, and then you start in early short or you start in early long, and then it takes out the zone you're looking at, and then you might start adding and thinking, oh, it's not going to go any higher. It's not going to go any higher. And then you add again. And now instead of being, down 20 cents, 30 cents, you might be down a buck. Um, and so now you're getting super nervous and you top ticket, you cover at the highs. So if we can help kind of pull up these things and highlight, where there might be good areas and show kind of the positive, the high end and the low end, and use those as your entry zones. That was kind of the point. Eventually, we'll get these things all finalized more and get them released. For us, like the way the algorithm works is we have an alert and it sends the notifications and it makes it kind of easy. So that's kind of the point of the royal flush zones and whatnot. And so we are going to move this out of the way and we're going to start towards the top. And to that point of what I was just saying, Gush is one that we'd looked at before, and it is kind of like, yeah, there's a royal flush zone, but man, it's you know it's kind of in the middle. And the interesting point for this one is you could actually be setting up for some kind of a move like this, where you've got an A B C D type of pattern, and so it may try to come back up a little bit here and then come and take out, kind of even low with these. This being a 30-minute chart. So I mean, you could do something like that, right? And that's where this it's probably trend strength reference point. There's a swing AV WAP just above here. So anywho, that's Gush. Gush, if you're not familiar, is a leveraged ETF that tracks kind of energy, oil, etc. Um, Moving on is SDAO. Excuse me. SDAO tracks the diamonds DIA ETF, and SDAO in particular is the inverse. And so if the Dow is moving down, then SDAO is moving up. Um, Pretty good example of that, and kind of what and how things played out. You can see that even on Friday here. So you know, open up kind of highs. We kind of spiked up on that non-farms payroll stuff there Friday morning, and then it's been too long. We reversed pretty quickly, and so it'll be interesting for SDAO, and I'll kind of go through these levels here. S-Dow, that first kind of royal flush zone, you can see is just a touch above the supply and demand zone. There's going to be some other evidence in here. Uh, so the zone is going to be 35.49 to 35.01. And with that and kind of calling that out, I will use this moment too to highlight, like, I am not a financial advisor. I'm not a financial analyst. I'm none of those things. This is just a way to explain and walk through kind of the prep and what we're looking at and how we see things. So none of this shall ever be construed or thought of as investment advice or anything else along those lines. It's not a recommendation to buy or sell. Um, it's just really a way to kind of visualize and see what are the different areas and zones out there that could be of interest. And so closing up on that, SDAO you can see is kind of an interesting one above, and so that would be kind of an area that we would look at. And definitely do not look at all of these. That's again why this thing gets set up and has these various filters for us and alerts based upon where things are sitting. So moving down the list is SPY, SPY, which again, kind of as you don't know, that is the one that tracks the S&P 500. We'll get to the bottom of some of the other areas and things in the chart here in a little bit. So SPY will be interesting kind of as well. I'll go redraws here since I'm switching charts on us. So SPY and a bunch of these charts are going to be pretty similar in that it's going to have a daily anchored VWAP zone coming down from the highs. Daily anchored VWAP, if you aren't familiar, VWAP is volume weighted average price. If you're not familiar with that, I'd suggest going to look at, say, like Wikipedia or doing just a general Google search to see what the definitions. But the TLDR is it is looking at the volume weighted average price. It is just as simple as that. Um, in our case, we use them for anchored VWAPs, and we anchor them to a specific day or to a specific 30-minute or 5-minute bar. Some people will go to different areas and they will actually anchor them to IPO dates or to beginning of the year or some other kind of significant catalyst event and kind of track them. The way that we use them as part of the algo is really to try to find swing lows, swing highs. You get so many attempts to hold them. As you are getting older, you get some more kind of strikes, as it were. So these ones here, I mean, yeah, it was below that, but that was really the first day, and then you can see it's kind of held above most of the other days. And this was a good example here where in these 2 days it came down and kissed that anchored VWAP, touched the bottom of the supply and demand zone, and so kind of back over here, same thing. Like it's on the verge at this point of probably being removed. So yeah, SPY kind of continuing on. Sorry, SPY has two zones really of interest come Monday. First one's going to be up here towards the highs, and that's going to be the 418 to 399.08. It's a bit of a bigger zone for the SPY, but I mean, SPY traded $11 yesterday, and its average, which is what this ADR stuff, average daily range, is on my chart over here in the upper left. I mean, move this so it's a little bit easier to read. I mean, its 20-day average is $5. I mean, you're gonna dump out after 20 cents. I mean, sure you could. There's definitely some smaller zones, but I mean, $11 day. I mean, would you be willing to risk $1 to make 10? I'd take a 10-to-1 risk versus return. I mean, come up here and maybe take a starter position, kind of the bottom edge of the zone, which would probably, since it's blue, be probably the upper edge of the daily range. Excuse me, ADR. In fact, I might even wait. Again, it's not a recommendation to buy or sell by any means, folks. But would maybe take kind of entry mid-level here, and maybe with the div or maybe this AVWAP here kind of falls down into this zone, which would be an even better kind of one. That said, if we open Monday and we're way above this, I wouldn't touch this zone because we've cleared it with pretty good significance if we kind of gap up on Monday. That said, it's kind of a nice little segue and hit on this before. Last week we posted this in here. Where is it here? we posted this last week and kind of looking at and extracting some of the ADR pieces, and we shared this work actually with everybody here in Twitter and the community. And so it's looking at ADRs, and it's been updated as of Friday. So the last 2 weeks, and we've not had a higher than the prior day's close. Since the beginning of August, it looks like we had one. I mean, actually, I can't double click that here. Um, so interesting just to think about. Again, ES is the futures mechanism that tracks that drives things, and SPY tracks the S&P. So it's pretty interesting. The last several weeks have been kind of lower inside meaning that we are opening within the previous day's range, but lower than the close. And outside would mean we're opening lower than the previous day's close, but outside of the previous day's high and low. And so that would be interesting if we kind of gapped up and we're coming up in here and whatnot. But anywho, that is SPY. Moving along, it's going to be DIA. DIA tracks the Dow Jones. ETF is what DIA is. One of the pieces I'll highlight here that I'd highlighted in the first kind of attempt at recording this was this lower chart here is what we referred to and mentioned a bunch of times on the Twitter feed again for symmetrical extremes. And so the algorithms work here is to try to find what are those symmetrical extremes. And it's the deviation about how far away are we from the 20-day or 50-day, or pick whatever moving average you want to track. Maybe you want to be a much higher time frame trader, and you track these on weekly moving averages or monthly moving averages to try to find when something's way kind of outside of the extreme. And so great example of this is a couple weeks ago, right? Back in June, the SE readings were coming down, kind of warning. And then you get into some big extremes here on these 2 days back in the middle of June, bounces a little bit, and then kind of comes back and retests. So June 14th, 15th, 16th, we kind of come back over here. 14th, 15th. These give you some pretty good ideas of what's going on, and can be some really big wins by taking out those and trading on the symmetrical extremes. And then conversely, right? So we are on one side of the symmetrical extreme, and look at what happened. We come all the way up. We're starting to get into some of these upper bound tiers here. And wouldn't you know, look at these. Not only are we coming into other pieces of confluence evidence, right? You got 200-day simple moving average. You got a downtrend, which has been violated a little bit. But I don't know. I'm not taking that trend line off of here just yet. And that's still pretty interesting. These are ones that have now been since violated. So in any event, moving back on to the stuff for diamonds. So you got a zone on Monday for the diamonds. You get 319.70 to 318.91. And this again also looks like it's going to be kind of coming in with the daily anchored VWAP from the highs. Probably be about this daily anchored VWAP here. We anchor him right there. Got that messed up, but you get the point. So you got the daily anchored VWAP coming in there. You got a supply and demand zone, and you're going to have ADRs right there too. So that should be pretty interesting. And it looks like that day VWAP will be right at kind of yesterday's highs, which again, the algorithm for me kind of outputs this automatically. Red tells me it's a VWAP from highs. Black tells me it's from the lows. And so all that's, again, super interesting. And it's a zone that'll definitely be of watching and interest. Moving on along is FAZ, F-A-Z. F-A-Z is a bearish ETF. It is tracking financials and whatnot, if I recall correctly, off the top of my head. FAZ has one zone of interest for it on Tuesday, and that zone is going to be in the 2312 to 2284 area. It's also interesting because it's starting to come close into its upside, or what I would refer to as sell side symmetrical extreme from some of the things that I've learned and whatnot. It is also interesting because, as you've heard us talk about the look a couple of times in the Twitter feed, this would also qualify as the look. It is coming into a 20-day EMA and a daily anchored VWAP. That could be a super interesting one. Right in this area, got ADRs in there. I mean, could be an interesting day. We'll have to see. It's really interesting on that one. Or again, it couldn't, and that's the whole point again of why we're trying to do this. And it's another kind of good segue to something that spotlighted in the previous one. I think it was on Friday. Gentleman Lance kind of messaged this one out, and I thought it was super interesting. Right? I mean, market's always there to suck us in, and it's there to present us with things that we will make up the image to tell ourselves. And I found this tweet here particularly relevant. Right, if you're not feeling it, if you're not seeing things right, take the damn day off. I can't tell you, like I've definitely been on the losing end of things where I'll start the day super early, but didn't sleep right. I've got something weighing on my mind, a presentation at work or some other family thing going on. And you just you think we'll just push through it. You got to push through it because you got to do it if you got a regular job, and that's not the case with trading. Take the day off, keep that 500, $50, 5,000, whatever number, keep it in your pocket. Don't waste it, and then go back and look at it and see what you might have done, as opposed to trying to play it. I mean, it's not worth the frustration. And so, if this doesn't hit, so what? There's thousands and thousands of stocks. Wait for the other opportunity to come up, which is again what we're trying to highlight and present to folks is where are the opportunities, what could be interesting, and really try to focus on those ones that are coming up for us. So moving on along, the next one coming up is FAS. So FAS there is the bullish ETF. And let me just spot check that while I'm waiting for this to draw. Pretty sure that was right. Sometimes mine starts getting a little bit old. FAS has a zone, kind of financial bull 3x shares. So FAS has a zone kind of at the highs, and it is interesting. We noticed this before. It is also again colored in blue, so that tells me that there's ADRs up here, and the dash line also is the other indication for me that this is a royal flush zone. If it weren't marked in blue, and if it weren't marked in kind of that in the dash lines, and I know it's not a flush zone, but the other ones in here are all zones as well with varying weights and importances. And so FAS, FAS, its zone for Tuesday is going to be 74.45 to 74.03. And that's an interesting one. And it may even dick for tick this zone because there's a daily anchored VWAP right here. And so it may hit that and not even come into this area. It's also possible that it could come close to this area and ADRs could actually move down and align more perfectly with that day VWAP. So moving on, next we have SVIXY. SVIXY, if you're not familiar, is the opposite of UVIXY. Both of those are leveraged ETFs that track the VIX. There's also historically been VXX. I shouldn't say historically. VXX is still there. I haven't tracked it in a while because it became very disconnected from the VIX. And I think Barclays just said they weren't going to do anything new with it. And that really kind of triggered the whole disconnect. And so SVIXY and UVIXY are kind of good ways to keep track of the VIX. If somebody tells you can't do technical analysis, they're full of shit. To be very blunt. And so SVIXY is interesting. There's two zones in it. The first one being on the upside at 53.84 to 53.66. And it's interesting because it's got a 20-day EMA in there. It's at the upper end of a supply and demand zone. And my guess and kind of where things are closing, it's probably going to be like a trend guide since guide's probably flipped. So we're probably in trend guide. for that particular one. In the lower edge is actually got a daily anchored VWAP there. Lower edge is supply and demand, and it's coming in at 53.24 to 53. So right now we're kind of looking like we might open below it. And as we mentioned before, I mean, Mondays for the last month and definitely for the last 2 weeks have tended to be lower inside type of days. And so those could be interesting because we could go lower, which would typically see the SFIXC go down. You could potentially then come up back later into the day. You could do potentially something like this. Get the right tool here, get a path. Like we could do something where we come down to this daily anchor VWAP, maybe touch that. And then this AV would probably come down here. And then we could come down and grab maybe, I mean, hell, we could even come all the way down here. I mean, $2 has been kind of the typical range. I mean, we could do something like that even, where we open the day lower, we rebound a little bit, where people are covering their shorts, people are starting to see it as buy, and then come up and hit this daily anchor VWAP coming from the highs, and then come down only to grab this kind of next ADR zone and this gap fill down there. So could be an interesting setup. Moving along to Apple, and I'm going to grab a Coke out of the fridge real quick. So Apple should be pretty interesting here as well. And I mean, it's definitely been in the downtrend for the last few weeks. You can see it was also similar in that it had been touching some of its 20-day symmetrical extremes. It was just hitting the warning areas. And it's definitely, from looking at the ADR piece down here, been kind of trending most days right at about or above that kind of average ADR on a percentage basis. And so Apple on Tuesday will be interesting. The zone, the RoyalFlush zone for it is going to be 50-day EMA. You're going to have a swing AV-WAP and daily anchored VWAP falling into it. Again, it looks like this one's probably also going to be a trend guide. So should be interesting in Apple at 159.33 to 158.64 as the RoyalFlush zone on it. Moving on along here is JPM or JP Morgan, and this one was super interesting when we looked at it before. There's a RoyalFlush zone coming into this one that, again, it looked pretty interesting for a couple of reasons, and we'll see those pull up here in just a minute. While we're waiting for it to draw there for us, is I mean, it's starting to come down and get near. Hasn't touched. The black dot there tells me kind of its current location, and the orange lines tell us what the algorithm has picked up as symmetrical extreme averages. So it is interesting for two things here. This is kind of a bigger zone here. This is an ADR area, and this is really the zone that we're taking a look at here from our 116.81 to 116.10. Looks like a big area, but the chart's kind of compressed there. So that's that one. But the other one right above it, I thought before was wrong, but I double checked, and it is not technically a RoyalFlush zone, but it is a very, very super interesting the look zone. You've got the bottom edge of a supply and demand. You have a 50-day extrapolated moving or exponential moving average and a daily anchored VWAP. Like, that is a perfect kind of view for the look. The thing I would be cautious about in looking at it is, as I mentioned just right before, we were already down pretty close to a symmetrical extreme buy side, in this case, symmetrical extreme for JPM. Although, candidly, look, if it comes up, I mean, this could be a setup for later in the week, which could make it super interesting. We could go sideways for a while, and this daily anchored VWAP and 50-day would kind of just go steady. This could come back up and hit that, and then take another kind of bigger leg down. I mean, if you take a kind of a bigger picture view out and say, do we have any kind of what we would, in a place where I've learned a lot of this stuff from and trying to follow methodologies and stuff. I mean, this could be setting up for a bigger kind of ABCD pattern. A, B, C, D. And if we look here, I mean, this is definitely 50% retrace from here to here. And that could be putting it all the way down at 9. I mean, you want to take people out. I mean, this would definitely start panicking people. And in the areas here, you see these kind of shaded areas on my chart over here. This is what the algorithm has carved up as supply and demand zones. And then the dashed lines are areas that are potential to go into fold into one, or that there's just been one-sided area. Top edge of this one, there's been enough activity at the top side and at the bottom side to treat it as a full supply and demand zone versus just kind of a boundary area where the dash lines are at the moment. And so again, closing up JPM 116.81 to 116.10 is kind of the area that would be watching and alerting on from an algorithm perspective going into Tuesday, September 6th again. All right. Sorry, I had to take a sip. So XLI is an interesting one. If you're not familiar, it is going to be the industrials ETF. If you haven't seen it or you aren't familiar with kind of what those different ones are, it's a really good, simple website. Just pull up ETF.com, type in the ticker. In this case, I just modify the URL because I'm kind of a tech guy. And you just scroll down into the list until you see top 10 holdings. And from there, you can see kind of who makes up the top 10 of that ETF. And so you got UPS, UNP, LMT, Caterpillar. I mean, so a lot of industrial type of companies, Honeywell, GE, Boeing, Raytheon. So pretty interesting on that one. I don't remember its overall fit for the S&P, but I mean, it's definitely smaller than technology and a couple others, but it still carries a decent weighting. Not that big on kind of the average daily range. Yesterday was definitely an outlier. You can see it came up from an ADR perspective into some of the extremes. Not the biggest, but 2.7% move on the XLI is pretty good size. And so on Tuesday, the zone of interest for it is going to be a nice kind of setup. It's just above the supply and demand. It's got a daily anchored VWAP, and XLI's is 91.25 to 90.99. So it should be an interesting one to watch. And again, you've got a much, much higher time frame one. This actually be violated in my mind if we take this off of here. This is kind of the beauty of the anchored VWAPs. We're just going to actually take this one off and show something real quick because that's no longer valid. I mean, it's been violated over and under way too many times to really stick around. Same thing even with this one here. We'll get rid of that. But if we go out and look at weekly, and hell, even the weekly looks like it's been violated too. And from a weekly perspective, actually, let me look at something else real quick here. Yeah, let's get rid of these. These were previously manually drawn. Supply and demand zones. We don't need those anymore. We calculate them all ourselves. So this is kind of interesting. Yeah, I mean, that's a bit of a stretch to go and say you got an ABCD from here to here, because that's kind of a good retracement just from here back up. I mean, I'll bet you if we look at it on monthly view, it's not that. Although, I mean, look, the other part that you got to do is look at things and go, okay, well, what could it be? What's the other side? Well, maybe it does come down here. Maybe it grabs kind of this lower area. I mean, maybe we set up for something like that. And so if you take it around and look at the flip side, say, okay, let's put that one, show ABCD down, and maybe we set up for something like this, or maybe we're just setting to take everybody out and kind of maybe we don't even go there. Maybe it's like this. Maybe we go here. Oh, we go in all new time highs. And I have no idea what the market's going to do. Lots of people will say that, but I sure as shit don't have any idea. I'm just trying to find with the RoyalFlush zone algorithm, what's the right areas to pay attention to and take interest in. And so with that, we're going to close off an XLI because I want to stop here at Tesla, and we'll call it a day on that one. So we'll do a couple more here. We'll skip the overall high scores. What we're thinking is we will probably go ahead and do this. Maybe we just do it on the weekends. We'll have to see and make that decision. The other part that we're considering is kind of pre-scan through and look at these and highlight the ones that are the biggest interest. I mean, really, out of the almost 400 some tickers we're scanning these days, and we keep adding more, just trying to find the ones that are interesting of relevance. So out of the 399 tickers that we scanned, we found and kind of generated a little over 3,000 zones, which is all. I mean, that's a lot of potential areas of interest. But it's way too damn much noise, right? I mean, who the hell's got time to look at 3,000 freaking zones? That's stupid crazy. And so the RoyalFlush piece kind of reduces it to 127 tickers, which is still a lot. But a lot of tickers are going to have some kind of zone of interest. And if you focus it there down into the specific zones, RoyalFlush reduced it from 3,000 zones to 148. So I don't know about you, but I mean, that's a hell of a lot more interesting to pay attention to. And then if I kind of focus it on areas that, are really the ones that are of interest to me, maybe the top 20, which is what the whole point is of sharing those zones in the Twitter feed, is finding those key kind of higher zones of interest in breadth. So think like your S&P, Amazon, Apple, some of the bigger ETFs. That's kind of where breadth and then other things come into play that are considered the overall ticker pieces. And so anyways, closing up here, that's a remnant of something else. J&J, it's got two particular zones. First one up at the highs, you got the supply and demand zone way up here at 167.61 to 167.23. And then you have 166.33 to 165.53. This one will be of interest just with some of the structure in here and kind of where it's been playing out, as well as you got the 20-day EMA coming into there. So should be an interesting one to keep an eye on. Obviously, there's going to be some. Looks like it'll be right about there. Probably another day VWAP right here. Yeah, that one's actually really interesting. It's at a lower zone, but it's tracking that 13 EMA super tight, which is what this daily anchored VWAP is right here. And it's interesting because that'll be where ADRs are come Tuesday as well. Interesting. All right, and then moving on, we're going to hit XLC. We'll spend a minute or two wrapping up after we hit Tesla, and we'll call this one and wrap it. So XLC will be interesting on Tuesday. If you aren't familiar with XLC, as a reminder, it tracks the communications sector, which is a little bit odd to think of for the tickers that'll be in there. So XLC is going to have things like Meta, aka Facebook, Google. So it's interesting just thinking about some of the ones in there, right? Netflix, Walt Disney, TMUS, Activision, Charter. So there's definitely some communication things in there. But that's what XLT is. It tracks the communications sector spider for that space. And so XLC's area or zone of interest on Tuesday will be 54.92 to 54.69. And it, again, you can see is tied right to a daily anchored VWAP. Again, it's probably going to be trend guide in there based upon how we traded last week. And then from a prep perspective, I'm going to kill it here at Tesla. Tesla, obviously, very interesting always. Lots of range. If you can get the right entries on this, I mean, average ADR is still, I mean, yeah, sure. It used to be $30 a range, but I mean, before the most recent split, 3.03 or some junk like that, actually. But shit, $13 a range. If you can get in and get, risk $1, let's say, or $2 and get, $11. I mean, I mean, there's some pretty good money still to be made in Tesla. I know a lot of people are complaining, "Oh, I can't. I wish they hadn't split." Like, shut up. Like, find like there's so much range and everything. Just sorry if that offends people, but like, just I think whining for things like that, having been doing this for a while, is just you're whining because you didn't get the play you wanted at the time you wanted because you missed it. I mean, woulda, coulda, shoulda, woulda. I mean, it just move on. Spending that negative energy doesn't buy us anything. And so, in any event, enough with the negative energy. Tesla, man, this zone looks really kind of awesome. You've got the daily anchored VWAP coming down. You got a swing anchored VWAP in there coming down. It's kind of starting the supply and demand. In fact, you could even make the case that like right here to here, I'm going to draw this right while we're talking. This is not that particular area, but I mean that right there is looking to be kind of a zone by itself, with just how it's been tracking. So we're gonna remove that for now because I don't want to mess some other things up. So Tesla's zone on Tuesday is going to be 279.35 to 277, 277.72. So interesting stuff. Again, we'll try to look through and highlight different ones out of the overall score next time around. Move this around. Hopefully, this one recorded better. Don't like having to do things twice. Maybe should have done a smaller test run first. But yeah, hopefully this was useful. Hopefully, um, as we continue to expand kind of the midnight brands and ultimately roll it under some different trade names, we just needed to get things started and wanted to use that. And so ideally this hopefully helps people, and we'll start sharing more. Eventually we look to expand the algorithm so that it can be exposed to people. We need to make sure we cover off some things. We just need to cover off a bunch of bases before we start to share some of those aspects externally with people. And so hopefully everybody has a good weekend, knocks them out of the park next week, and we will look for other ways to expand upon this and share it with the community. Thanks, y'all. Have a good one. And again, this was Midnight Brands bringing you prep for Tuesday, September 6th. Have a good one. Later, y'all.